Okay, good morning, everyone. Today is Wednesday, December 9th, and I'm Michael Boutros. Good to be with you guys this morning. We have no data prints on tap, so we don't have to rush through anything. Good morning, Eileen, Permendra, Bernard's in the house, Aurelian, Christopher, Kyle. I just saw your tweet from last night. You were having questions on IDO. Let me know what specifically you're looking for. See if I can help you out here. IDO doesn't offer searches on equities, guys. What I was noting yesterday, I think what you might have gotten confused, Kyle, was that there is bank research, or not bank research, proprietary research at the bottom of the insights page. So when you log into IDO, scroll to the very bottom. They got some great research reports. These guys actually caught a really nice flip on gold a couple of months back. So that's all part of the offering, Kyle, and you're automatically signed up for that. So I hope that answers your question. So let's get things started. Some nice setups in view. Been playing around with sterling key. I've been in and out of Aussie Yen. Euro Oz didn't go quite the way we thought. Broke through that bearish invalidation level pretty quick, so we didn't get too stung on that one. Euro Yen is something we'll take a look at, as well as Euro Dollar. Looks like we make a break of the initial weekly opening range, but you're eyeing some resistance close by. Okay, as always, questions, trade setups, feel free to throw them on the message board as we go out. As we go through these setups, guys, I'll be more than happy to take any questions that you have. Kyle says, got it. Thanks, Mike. Anytime, Kyle. I saw that tweet this morning. I apologize, didn't get a chance to get to you. All right. So, relative performance on the greenback. You're looking at the dollar index right here. You can see it lower on the session. We went for a perfect tag of that 618 retracement before pulling right back below. We're back below that 12,123 mark. If you remember, that was the former high day close. And we'll see today if we can make it below that median line to see if we can get a push lower here. Here, I just wanted to point out that, there it is, momentum is coming into 50, so we'll be watching that. The 30-minute for the dollar index looks like this. Just snap these lines for you. So the initial weekly open, there's your stretch, right into that 618. There's the median line, and there we are breaking back below it. If you guys remember, we highlighted this region here yesterday. So the break below, you're still looking for that channel support, lower median line parallel right there, and that's really the break that we need to get to validate the broader turn that we're seeing here in the dollar. Fed is only a week away. It's a week away from today. All right. So in 7 days' time, we'll know. We'll have larger implications for all the dollar crosses. Again, like I said, interestingly enough, I'll show you guys a cool note here. So this is implied probability, or basically what markets are factoring in as far as interest rates from the Fed moving forward. So you can see that at the next meeting, 12/16, it's been moving up. This was at 78% yesterday, meaning that 20% chance that we'll see it hold between the 0 to 0.25. But if we do get that 25 basis point run up, 80% expectation that we'll see that. Now, last month, ahead of the, or previously, that was right around 72 as well. Okay, if we can go back a month, you see that was right around 72. So now that we're looking frontwards, moving up higher to 80% chance that we'll see an interest rate hike. Point is, the markets are largely factoring this in. So we need to be careful about trying to justify any dollar longs on that premise. Also, a quick look at relative equity performance. Here's what the equities look like overnight. We're still trading lower across the board. Rough time in Asia. You did squeeze out a gain on the Shanghai composite, but the rest of the market's still lower across the board in Asia. U.S. equity futures also look poised for a mixed open. So you got the Dow up about 19 points. S&P still off by about 1 point. NASDAQ down by 8. So risk is still on the back foot. Okay, just keep that in mind. Something you always want to keep sort of in the forefront. Any questions on the dollar index before we start jumping into the setup? Watch for support near that lower median line parallel. Again, near-term resistance now back up at 12,123, followed by that 618. Masanori, I hope I'm pronouncing your name right. Good to see you in the room, sir. Says, can you take a look at Kiwi Yen? Your opinion, please. Yeah, let me jot that down. We'll take a look at that as soon as we get through these setups. New Zealand Yen. All right. So if there are no other questions on, he says, thank you, more than welcome. If there are no other questions on dollar index, we're going to jump right into the nitty gritty. So let's start off with what didn't work last night, and that was the Euro Aus. So here was the Euro Aus setup. Here's what we look like. The 151.47 into 64 barrier was pretty big, okay? You had a 618 extension right off the lows. Let me bring that up. You had that swing high, nice pivot right there at that 5150 region or 5160 region, and momentum was showing divergence as you made those subsequent highs. So I was looking for a little bit more of a turnaround to come into support here, maybe get long again with our bearish invalidation or our bullish invalidation level down here. You didn't really get that pullback, okay? It kind of just muttered a little bit right below that, and that's actually where it ended up, was the low one, was that I published this. So we came, we pushed right through. There's that channel resistance offering some resistance again. I still think we can get this thing turning over. You know, even though we made another subsequent high, RSI is still making a lower high. Now, the one thing I want to say about this, and I always stress, is that the further the divergence signals are from 50, the weaker they are. So I'm not going to put too much emphasis on that. And I haven't really taken anything else on this. You know, I took one stop on it, but we'll see if we can get another entry to try to press this lower. On the daily chart, you might have a little bit more of a rally towards 52.98 is what I'd be looking at. So if you look back to this formation, if my mouse wants to scroll, right here, from 2013, 2014 highs, really nice median line action. And that upper median line parallel comes right in with the 50% retracement right around just shy of 53. So you could get one more stretch higher. Again, here's where I'd be looking to start initiating or looking for some short scalps on the near term. And the immediate term right now, guys, I'm not going to try to fight it. I'm not going to try to fight it. If we break back below here with some significant short triggers, maybe, but we've had so many better setups in sterling, Kiwi, Aussie Yen, so I haven't really been trying to press this too hard. Levels unchanged. At this point, the only thing that you want to take in consideration is the retracement we're working in. It's too soon to tell if this is a high, and I hate doing this, but just for reference, we'll stretch that there. And we'll bring up our near-term bullish invalidation level to 49.33. Okay, you see that 236, how it lines up really nice with this high? Right at the 50.32 level, 50.33, really nice with these lows. So now that that fib is representative of a bigger pivot in price, we're going to go ahead and get rid of that 38.2. And that cleans things up a little bit. So these are the amended levels, guys, to take into account overnight price action. Again, for anyone who's new to the room, you can always click on the camera button in the top right-hand corner of your GoToWebinar screen, and that'll take a snapshot of any of the charts that you see presented here. Any questions on Euro Aus? Probably my least favorite setup that we're going to discuss today, but you know, the premise of the trade was the breakout of this multi-month formation, right? So we were trying to play a rebound back into support to play the long. It just broke higher, so we'll kind of sit on the sidelines here, but we'll need a pullback if we want to try to play the long on this again. Or if we spike into that key region, 53, 52.98, that might be a nice short exposure as well. All right. All right, next up on tap, one of my favorites. I know Mark McDowell doesn't make it to these webinars, but when he sees the recording, I'm sure he'll like this one. So Sterling Key, big player. I mean, a massive ATR on a daily basis, guys. This thing's putting in 240 pips. So I tried to give you a little bit of a warning on that. But it is a wider range ATR. So if you're newer to short-term trading or if you're just getting started, it might not be your ideal pick. But certainly for those of you who have been with this strategy for a while, you know, the opportunity is definitely there. It gives us a little bit more flexibility with where we can place our stops because it's a bigger range, but worked out pretty well. So let's go over it real quick. I also highlighted this yesterday on Daily FX. The main premise of the trade was this. Excuse me, we came off a big daily support region last week, namely defined by the 618 extension off the September high, the 100% extension right off this last month's high, November, a broader 50% retracement of the entire 2014 trading range, and the 200-day moving average. Okay, all of that lining up in this region right here between 222.80, 222.30, or excuse me, 223.13. So we went for a tag of that exact level. I think the low on Friday was 13, made a rebound. Yesterday we were checking a break of this basic trendline resistance. And you'll see on the intraday chart, it's much clearer. So the premise of the trade was this. Look, we either look for a pullback again into that support, former resistance to buy, objective at 228.22. The monthly open comes in at 228.51, or you got the bearish invalidation level pretty quick there. If it breaks down, you're going to look right back to that key support level down basically around the 223 handle. Here's what the intraday trade looked like yesterday. Yep. And here's what it looks like now. All right. So there's that former trendline resistance. Remember, this was a multi-month trendline resistance. For a nice channel, I was holding this thing. We came back, break, check it as support, check it as support. On those support checks, you can see momentum, equal lows, price action, lower lows, right? Followed by trigger break. Wasn't the prettiest trigger, okay? And in fact, the better one would have been the break back above this region. So on this pullback here. But in any event, we took out all the targets noted except for our final target, which was up here at 228.19. I think the high was just shy of that. The high was 228.10. So looks like it's turning over a little bit here. You could get a little bit more of a pullback. Near-term support back at the 227 handle, followed by that lower median line parallel. And again, I put this in dashed, guys, because we don't really have conviction or enough price rebounds for us to use this. So last night when we drew this on, you know, you haven't had any conviction rebounds, reversal, or pivots off it. Now we have, right? Now we have, and broadly speaking, the slope has been holding pretty well on that stretch. So I'm going to go ahead and solidify that as an operative formation for now. We'll still leave it in gray there. But just to give you a picture of what we're doing, right? So you can get a pullback here, near-term bullish invalidation. We're going to go ahead and lower it to that key region. And we'll be looking to stay constructive above that play. Keep in mind also, this was Thursday's swing high. That soft target to 27.82 or so. So a nice play on that. Still looking constructive above 226.20. Break of the upside looks for 228.87. Basically 229.72. Christopher says, don't mean to disturb you, Mike, but dollar yen is checking major levels right now. Thought you want to know. Yeah, take a quick. Of course, guys, price action always takes precedence over anything that we're reviewing. Yeah, so this is what I'm doing with dollar yen. I did want to review this. We'll go back to sterling Oz if you guys have any or sterling key if you have any questions. But dollar yen, what are my notes saying? Coming into some support soon is what I noted last night. Right. So here's the thing. If you're still holding a piece of that swing trade that the long dollar yen, that stop is at, I think, 122.20, I think, is where Jamie has that. So you do have some space before it gets down there, but this is what I wanted to note. Basic trendline support, Chris, right off that low from, what is that, November 14th, 15th? Tag, tag, tag. It's coming right into play right here. And again, 24 is the actual swing low from November. So if we, from that same November decline rather, mid-month. So if we break below that, you could see this thing fall apart pretty quick. Momentum is an oversold condition. That's nothing you want to try to fade, guys. So keep your ears and eyes peeled here. I don't think there's going to be necessarily a play that we can jump into at this point. What the 5-minute looks like. So you're way in oversold territory. So anything on the short side here, guys, would be chasing. You have nowhere to put a conviction stop. At the same time, to try to fade it, you never want to do that while this condition holds. So Chris, thanks for pointing it out, man. I don't necessarily have a play for it. We could come right off this trendline support. I don't know. But as long as that momentum signature is in such oversold condition, that just means the propensity for the market to push lower is there. Okay, and here even a 5-minute chart, really oversold. Oof, there's 122. Okay, I'm seeing if there's any reports that are hitting the headlines here. Okay, don't see anything, guys, as far as something major that just came out to cause that move, but we'll continue to track this one. All right, so let me take a quick scan back here for dollar yen now that we've seen such a stern move today. So here's the deal. Come on. Come on. So former upper median line parallel. You see that? This formation held price action for over 3 weeks. The break then tested as support before moving off, tested as support again, moving off. Here it is yet again. Nice near-term confluence region right near 121.83. This is the breakdown zone still. 122.73 into 85. 121, excuse me, 73 into 85. This is still the breakdown zone. If we clear below that, you're likely to see some really stern losses for dollar yen. Okay? Look at that multi-month trigger support. Looks like it wants to give out as well. Keep an eye on that. The daily chart's all I've been looking at, to be honest with you, Chris, as far as dollar yen. Until we clear this range, really critical range between 22 and 123, I'm just treating this as a range-bound trade. So if the market recovers in short term above 30 as we open up the U.S. markets, you might even want to play the long side, but not while it's in such oversold territory like that. All right. Kind of jumped out of order here, but does anyone have any questions on dollar yen? No trades on dollar yen so far for me this week. Thanks for pointing that out, Chris. Yeah, you're at near-term support right here. Long triggers are now present, but thanks for the review. Oh, he says, I'm correcting. He says long triggers are not present. Yeah, actually, you just got me looking. Let me just check out and see if we have anything that we can work with. When you try to fade a move, I like multi-point triggers. More touches, the more significance it has. Yeah, I'd just be watching those kinds of triggers. Getting back above 30 in and of itself sometimes can offer a nice trigger, but not on a move like this. I'd want to see some more concrete basing. This thing looks like it's falling out of bed pretty hard. And if we take a look back at the dollar index, I'd expect to see something similar. And there we are, dollar index checking median line support. A break below this level, by the way, on the dollar index takes you to 12,071. That was the open of October trade and a really nice pivot in price, as well as the 414 reversal day close. Big, big level. It's exactly where we rebounded off of last week. So near-term support at the median line, a break below there, look for 1271. All right. So that is dollar yen. Any questions on sterling Kiwi? We kind of jumped off that. But before we do, any questions on this setup? Likely to see a reset. Again, we'd be looking for a pullback into that same level that was resistance last night. If we get some long triggers down there, I'd be more than happy to get back on the long side of this trade. Still looks constructive. Momentum, as we noted last night, still holding 40. That thing held like a rock, right? Break above overbought condition. Keeps the broader momentum profile constructive. So that is sterling key. Took out all our targets. The amended targets there are noted for you. Next up on tap, Aussie Yen. This was from the Monday report. Here's what we're looking at on Monday in Aussie Yen. We came to a big area of resistance early in the week, late last week, just above that 90.18 threshold. You had the 200-day moving average, channel resistance, embedded channel resistance, all holding there. Momentum, multi-month trigger support. We were looking for the break on the downside. Here's what it looked like intraday yesterday. Just sitting at a basic 50% retracement off the low. You had confluence median line support there. The break of something like this, really descending channel break to the downside, like I said, is typically the sharpest move. Here's what Aussie CAD look like on the daily. And here's what it looks like on the 30-minute. All right, so you can see there was that 50 break, and again, real tumble. Took out our last target last night, which was 88.20 into 88.09. And again, you're seeing some divergence on these lows, right? Price action making a lower low, the oscillator making a higher low, pending trigger break does suggest you're at risk for a near-term rebound here. You look for some resistance right up into the 89 level. And this, my friends, is what we're going to validate, or this is what we'll hold as our bearish invalidation level. So if it breaks through that, forget the short side. As long as we hold below that region, we'll be looking to sell rallies in Aussie Yen. And again, remember where the weekly chart looks like, right? Nice reversal candle there, momentum at 50. The daily chart, there's that trigger break. A lot of things here to look at. So another one of my favorite trades, besides sterling key last night, Aussie Yen, is something you want to keep on the radar. If we break below here, by the way, I really don't have anything on tap until 87.57. Okay, nice pivot in price, the highs that you made back in September, but also you have the 100-day moving average, and that comes in at 87.52. So 2 pips off. 87.50, 87.52 would be the next major key support there for the downside on Aussie Yen. So another one that marked out pretty well. Last night. And again, just as a disclaimer, remember, there's nothing to stop this from break of support, check it as resistance, then move off. So keep that 89 level in view near term. Okay, so that's Aussie Yen out of the way. I'm just briefly going to touch on Aussie Kiwi. This thing has just been such a slow burning trade. It's been progressing really well and the levels work really well. It's just you got to be really patient with it. It's not something, every time I get into a position on this, it doesn't turn out to be an intraday position. It takes like a day and a half to finally make a move. Then you sit in this godforsaken range for a couple hours. So it definitely tests your patience, but the levels are pretty good. The only thing I've added here from the report, guys, from um, Aussie Kiwi, which was on Sunday, I think, was just this sliding parallel. So if you take that same slope, attach it to the Sunday open, you can see it caught the lows pretty nicely here. Broader bias outlook remains unchanged. Remember, we're playing on the premise that this thing came back into that slope. We broke it, tested as resistance, and now we're moving off, looking for a drawdown a little bit lower here. So our bearish invalidation level will want to lower. Let me say this. The immediate bias is bearish below that median line. The broader bearish invalidation would be a break of the weekly opening range high. So if you see that 109.60 level give out, you're probably likely to get back right into 110.20. Near term, though, still liking this lower on Aussie Key. Remember, it's a little bit tighter of an ATR in comparison with the Sterling Key that we were looking at with 60 pip ATR. Aussie Key is a little bit tighter. Quarter of the daily ATR is only about 23 pips, so haven't been too excited about this one. I don't think I took any positions on this yesterday, did I? No, not Aussie Key. Okay, so we'll keep an eye on that. Now let's jump into the juicy stuff. I know you guys are looking at the euro. I know there's a lot of noise on that, and then we'll jump into Kiwi Yen for Masanori. I hope I'm saying your name right. And also Bernard wants to look at the S&P. Hey Bernard, great to see you, man. S&P. First things first, I want to go through euro, and then we'll do euro yen, and then we'll jump into those other yen crosses. So here's euro dollar. Here's what we published for the euro back on the 7th. So after Friday's major wild stretch, we came just shy of that 110 handle, which is sort of a nice cluster of possible resistance targets. Came back. We cited a long bias against 107.47, 107.50. So as long as this pullback held above that 50, we're going to look for a break to the upside or a move to the upside. Here's what euro looks like on the daily. We made an approach to pull back, didn't quite get into that region, okay, turning ahead, and here we are again looking for a target back at 110. 110.05 specifically is the 50% retracement of the decline from the October highs and basic former trendline support off the yearly low, support, break, resistance, current operative resistance. So looking for, a bid here. If we break through this, you still have that 100 and 200-day moving averages to contend with. Wouldn't necessarily worry about the 200. If you look back in price, we've sailed through that quite many times. The 100-day moving average seems to be respecting support a little bit better. Either way, this is going to be a big break up at 110. If we see that rupture, we're going to keep that top side in focus. Here's what the scalp looked like. Oops. On the 7th, and here's what it looks like right now. So the weekly opening range high, objectively, right here, broke. Topside bias remains in play. First target at 109.50. Watch that upper median line parallel. We're checking it right now. 110 is the big region. Big region. Okay. Bullish invalidation now can be raised from 107.46 to 108.30. So as long as price stays above 108.30 now, we'll continue to favor long scalps in the euro. Again, as a disclaimer, we're coming into resistance, so I don't want anyone to misinterpret. We're not jumping into any longs here. We're looking for a pullback to get back on the long side if you're not in already. I'd be looking to shave off half of the trade here. If we get into 110, that's a bigger region of resistance. Again, I'd be looking to take some more off and bring the stops to break even, if not better. Subsequent topside targets, by the way, if we do break. You're looking again at that 100-day moving average. It's right around 110.58. I have a soft target at 110.86. More importantly, the 618 of the entire decline, that comes right into 111.20. A nice pivot in price as well. Catching the lows here in October, catching the highs here after the break in late October, and it's a 618 retracement, all line up. Okay. Euro dollar, testing your term resistance. Where would have been the long entry for the euro dollar? Let's take a look at what the 5-minute chart looked like for the euro. Ooh, dollar yen can't catch a bid, huh? We're going to break 122. This would have been the long here, Eileen. I don't like when the triggers are this steep, but when you have that many touches, you basically have 1, 2, 3, almost four touch trigger, right into support. This was the opening range low for Tokyo. If you take it against the US range low, that leaves you with a stop of like 15 pips almost. So really nice tight stop. You're looking for about 26 pips. You're on your way. Does that make sense? That was deep in Tokyo trade, like last night. And another thing you want to do, guys, be dynamic with your analysis. I map out the levels for you, but still, if the market makes a stretch and you're looking for the pullback, go ahead and tag on a quick retracement, okay? These are horrid colors. I'm not sure why it's that color. But my point being, Eileen, is go ahead and be dynamic. Strap on a quick retracement. Look for where the basic pullback would find support. So there's the your highs from US. You're in Asia looking for entry. The pullback comes right into the 236. Your lows from US are just 15 pips away. Off to the races, right? Our bias was to the upside anyway, so we're looking inherently for long scalps. But watch for this near-term resistance. Again, 110 is needed to really validate the breakout. Eileen says, I see it. Thanks. Would there have been another in open Europe time? There is another. Yeah, sure. It wouldn't have been. Actually, it would have very similar setup. So here's what the scalp, here's what the trigger I'd be looking at. Specifically, even more so than this is more of a conviction trigger, Eileen, because 40 held. So really giving you validation that the top side is in play. Irrespective, by the time we were in Europe, we were already above the weekly opening range high. So hold at 40, trigger break to the upside, stop against the session lows. That's even tighter. So this would have been even a tighter of a setup for a proper risk to reward ratio. So yes, there was one in Europe too. Make sense, Eileen? Is that helping? Okay, good. See it. Thanks. All right. Cool. Moving right along. Any questions on the euro? Okay, euro yen. I just want to touch on it briefly because we highlighted this on I think it was one of the radar charts a couple of days ago. Yep. So here's what euro yen looked like earlier in the week. I just wanted to highlight that we're consolidating still under that resistance level. So if I zoom this out, let me just snap the lines for you real quick. Okay, we're still consolidating right below that upper median line parallel formation. Okay, also nice fib confluence right around 134.12. This actually might be a decent short position. I think we might have just missed a trigger. Let's see what it looks like on the 5-minute. Okay, I was trying to catch a short on this before the webinar, but it looks like I missed it. So why was I looking for a short? Divergence, divergence, higher high, higher high, lower high, lower high, same highs. Even if it's the same high, it's divergence, right? Trigger break. This is what we just missed here during the webinar. But in any event, checking the weekly opening range high, any stops would be against that median line. Any shorts that you take should just be into the opening range low for now. Once we break through that, you are risking a steeper move towards 132, but broadly speaking, we're looking for an opening range here to give us some guidance as we set the opening range right below resistance. So Mark Haverman says, LOL, these webinars are costing you money. Yeah, you're telling me, man. It's all good. But the point being, we're in consolidation below resistance, guys. So if 34 gives out on the top side, 34.60 is the 100-day moving average. 35.18 would be a nice 764 and a nice pivot in price. But near term, I don't think we have much to work with here yet. I would have liked to have been on the short side just because we're at resistance. And momentum was struggling here at 60. You see that? Okay. So quick review of Euro Yen. Really tight range so far to start the week, but a well-defined weekly opening range. We'll look for that to give us some guidance. Last but not least, before I jump into your questions, or I guess this is one of your questions, who wanted to look at Kiwi Yen? Masanori wanted to look at Kiwi Yen, right? Here's Kiwi Yen. Haven't actually checked it out, so give me a couple of minutes. Let's jump through this and see what we're looking at. So right off the bat, just looking at it, you're coming into a very nice confluence region of support. And that's basically a basic trendline support off the lows. Okay. But also, you have that former median line parallel off of the highs for the year. Former resistance, now support. Also note that you are checking, oh, this is even better. You're now checking the weekly open, the monthly open right here. Might be a nice area of support. Let's see what it looks like on the near term. Okay, so I think you're at risk for a little bit of a rebound here, and I'll tell you why. If you look at the momentum signature, we're making new low, new low. This thing's continued to make higher lows, so the looks like momentum is fading, and you're coming into support. So here's what the game plan would be. If anything, you see a downside break below the lows that we made in, I guess that's Europe earlier today. That would be sort of a breakdown. I would not want to fight that. At this point, right at these levels, you are testing support though. You could get a nice rebound off it. Again, near-term divergence is apparent in the momentum signature. Price at a very important pivot in price. You can see right off the bat the monthly open and a couple of trend lines. So key support near term is what I would say on this one. Masanari, I think you're at near-term support here. If that breaks, look for a drop right into the 80 handle. There's really nothing in between. Okay, you got a 100 pip move to the downside. So you're at a major support. Near-term resistance, I would still keep it somewhere around 82.40. Not so much stress in the 50% retracement, but basically the close highs for last month. Bear with me. I just want to see what this looks like. It's going to be ugly. Just give me a sec. So what I like to do sometimes is, even if I do have a slope or a bias for the topside break, right? Let's say it's a rally and it's coming to support, and I think it's going to come into a nice place of rebound where I can play the upside, right? But I don't know how far I want to take it, and I don't know what the invalidation level for the short would be. A lot of times tacking on a pitchfork formation or a ML formation off the highs will give you that invalidation. So for me, basically resistance is still at the weekly high. On all accounts. Adding this parallel right here further highlights the support structure that we just talked about in the daily chart. So any way you slice it, I'd be very cautious here into the 80-75 region as support, likely to see some rebound off that level. All right. Masanari, does that help? He says, great, thanks with exclamation point. Cheers, mate. Again, welcome aboard. It's good to see you in the room. Let me know if you have any questions on that. Kyle wants to look at the Kiwi Dollar. So while we're on the Kiwi theme, right? Why not, right? Here's what Kiwi looks like. First on the daily. Hey, Manho, saying, Michael, did you cover Aussie Kiwi? I did. I'll take another glance at it for you if you want real quick, but there's really no change to the outlook or the levels. Still looking lower, but you could get a little bit of a snapback higher near term. If we have time, Manho, I'll take another look for you real quick. But as it pertains to Kiwi Dollar, I think Jamie's got a better grasp on this one than I do, per se. This is what I can say for Kiwi Dollar. I'm looking higher. This is the support I would want to see hold. Right, this region. Really nice pivot in price, 66.20 into 66 handle. You see how many lows that's caught? Low, low, break, resistance, 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 break, support, support, support. And you had some divergence again into these lows. This divergence signal is probably one of the strongest that we've seen today just because it's closest to 50. So I like it higher. It's just the daily chart's pretty ugly for me. And typically, if I don't have a good grasp of the daily, I start to shy away from it. Let's just say this. Let me just give you my piece on this. The RBNZ obviously is tonight. We are expecting them to cut interest rates by 25 basis points. The devil's really going to be in the rhetoric, whether they come out with a much more stern, this was a one and done approach, everything is, rosy, or if they come out saying that there's room for further scope for further easing down the line. That could really be the game changer. If they just cut 25 basis points and everything is status quo, I think this thing could rip higher. Note that we also, guys, came into the monthly open and just turned ahead of it as well. So I would stay constructive above the monthly open, which comes in at 65.79. And look for topside scalps, or topside triggers, rather. I think for a trade like this, I kind of want to sit out the RBNZ tonight, rather. Manho, Mark Haverman says RBNZ tonight. Right, yeah. Yep, RBNZ tonight. They got the BOE the following day, which is why Sterling Key has been sort of my focal pair, let's call it for now, because over the next 48 hours, you're likely to see a lot of price action here, guys. Okay, back-to-back interest rate decisions from the RBNZ tonight and the BOE from the UK tomorrow. So if I'm going to be trading a Kiwi cross, Manho, I'd probably be more focused on this. I think Aussie Key, another one that Manho wanted to take a look at, looks like this. Went over it earlier. The buy still remains. Nothing's changed. It's just that it's a real slow burner. It's a laggard. Hussein says RBNZ this afternoon at 3 p.m. Yep. Are you asking me or are you telling me, Hussein? It's 3 p.m. Eastern time. So nothing's changed on this, Minho. I still like it lower. I would bring down the bearish invalidation level. We started the week saying bearish invalidation at 110.20. I would bring that down to the weekly opening range, i.e. 109.65 or so right now. If we see a break above that, I do think this thing's probably just going to pop right through. Bernard wanted to take a look at the sterling. What was it, Bernard, that you want to take a look at? Oh, S&P, right. So here's what S&P looks like. I haven't been tracking it as closely intraday, but here's what the daily chart looks like. Might seem a little messy, but let me just walk you through it real quick. So we were kind of working with this as guidance. You can see that it caught the high right into the November open. Here's the December open. And by my estimates, we've just set the monthly opening range. Okay, this support target, which I was looking for a move lower when we closed below it on the 3rd, but then we had that reversal candle take us right back above, check the median line as resistance again, and here we are reversing lower. So I do think that, you have some lower down to go, maybe down to like 2036. Big support is 2022, 2021. This is the biggest region of support near term. You have the confluence of that median line, 38.2 off the lows, 618 off the highs, and they all confluence right there. Not the cleanest play by my estimates, but I hope that helps, Bernard. Let me know if you have any specific questions on that. Hey, Pietro, good to see you, man. Says, hi, Michael. What's the name of the opening range extension? I'm not sure what you mean by that. And did you check Euro Oz? Yeah, I went over Euro Oz first in the session, so you can see that in the archive band. I'll have it up as soon as I can. But as far as on your charts, it says November open. Which chart specifically are you looking for? This one right here? This is not an extension. This is just vertical lines I drop for the monthly open on every month. I actually manually draw those. This extension right here is just off the decline. And again, this is just a tag that I put that on as well, Pietro. I do this so that every chart I look at, if I haven't looked at it for a couple of weeks, I'll know that that tag is still there. So I'll jump into a chart and say, hey, I haven't looked at it since this week. Once I analyze it and get it up to date, I'll move that as a marker so I can remind myself, this is what I've been watching. Just a little tidbit for myself, but not an automated plugin. All right, so I think I got through most of your questions. Dollar yen daily is completely mess. Is there any sense to it at all? The abomination, says Gary. Yeah, man, I mean, it's what dollar yen does. So here's that support structure we were just talking about. This is big. If we break below this, sayonara. Sayonara. We've been in this range for what, 3.5, 4 weeks now? Looks like that trigger break is going to give out. Remember, we can't make any assertion to that trigger break until the market closes today. So if we close today below there and price breaks through that low, I would be looking to sell rallies in dollar yen. Yeah, that's done. I mean, you're at a support now. That's last ditch effort. So let's clean this up. We don't need this anymore. Don't need that anymore. Don't need that anymore. just on a basis here. Let me just see what the extension off the high looks like. Yeah, you even broke 100% already. Where's the 618 come in? Whew. And let me just take one other measurement here. Oops. Okay, so if this is some sort of double top, near term, triple top, whatever you want to call it, a measured move of that range takes into the 50% retracement. Wow, so like 2089, 2090. So this is big. This is big. Remember, 2173, 2170 is near-term support. Don't get anything excited beyond that. He says the abomination just broke in full stop. Yeah, I mean, that's what happens. This is why we got this is why I nicknamed this thing the abomination all those years ago. I'm always skeptical about this pair, but when the setups are there, the setups are there. We're not going to be prejudiced just because it is what it is. But for me, as we opened the week, the break below that median line formation that was holding for nearly 3 weeks, that's kind of the first thing that warned you that things might not be so cheery here for dollar yen. With all the big changes the market has been through recently, the dollar yen still held that range. This break feels huge, says Hudson. Yeah, we'll have to validate the close, Hudson, or Christopher. I'm sorry, I keep calling you Hudson. But yeah, I mean, I don't think there's much to argue that. This is a range that's been holding for some time. Absolutely. And the trigger break there is a multi-month trigger break, so those tend to be pretty effective as well. I bet the dollar is having a giddy old time too. That looks like it's breaking as well. Remember 12,071 we talked about earlier in the webinar. 414 reversal day close on tap. Sterling CAD, Mark says looking for a short between 206.30 and 206.60. Sterling CAD, let's take a look. Here's the daily. I don't know if you'll get up there. So here's what I'd be looking at real quick, just off the daily. The 30-minute might give us an opportunity, but just looking off the daily real quick. You have the 618 retracement from the decline off the highs. So that's the entire range that we've held for basically 4 months. That comes in at 204.96, basically a 205 handle. Just higher, you have the upper median line parallel. Momentum at 60. There's a couple things to look at on this. If you break above that, I'd actually be kind of cautious. I don't know if I'd want to necessarily press a short. Oof, and that's 100% extension too. So you're working with a lot up here. Okay, so that looks like we've made a push. Watch that upper median line parallel, 205.60. I think, let me ask you this, Mark, where are you getting that level from? Are you just looking against the highs here? Or with all that big, he says, I have a different fork already above mine. Was just looking at the horizontal resistance. Thank you. Right. So you're basically looking at that high that we made. It makes sense. It makes sense. And that actually comes in really nicely. But that's at 105.60, not 106.60. Excuse me, 206. That's at 205.60. You have 206.60. So I don't necessarily have anything up there, but I'd be watching this region of resistance near term. And dollar CAD, I mean, honestly, guys, I want to trade dollar CAD, but when we come into new highs like this, you have no previous price action in that range to give you any guidance. So here's what the daily looks like. Um, Remember yesterday we were talking about that former median line support serving as resistance. We did close below it. We pushed right through yesterday. And the only other thing left here is just basic trendline resistance, which came just a little bit higher. Trade remains constructive above 134.80, 134.60. This is the key support near term. Sorry about that, guys. Computer is working a little slow today. Okay, there we go. I know this seems like a really busy chart, guys, but we'll see if we can't clean this up for you. That's null and void. That's interesting. I don't have anything major on dollar CAD. We'll continue to look at this one. I don't want to waste any more time because we have to run. But one more question here. Sterling dollar. We didn't go over that. He says, is it still bullish? Masanari says, let's take a look at the sterling dollar. I'd rather be trading other sterling crosses than the dollar. But this is what I'll tell you. I was suspicious of this thing yesterday of continuing to favor the short side once we broke back above that median line. It just missed that soft target we talked about last week, actually, at 49.50. But long story short, we're now checking the upper median line parallel. So if this breaks right here, Masanari, I think this thing is going to run right into the subsequent target. So you're looking at a confluence region around 152, just below 151.94, 94, 95. Upper median line parallel, basic 50% retracement from the decline off the highs. But yeah, this would shift the near-term focus higher. Just took out the weekly opening range high. Here's the weekly open. Hey, you're more than welcome, man. I appreciate that. All right, that is the opening bell here in New York, so I have got to run. Guys, don't forget, today the midweek strategy webinar with Jamie Setley comes up at 1 p.m. Eastern, so don't miss that. Again, quick reminder, everyone here has access to IDO from now on. That offer ends today, so there'll be no more reminders, so just remember that as far as the IDO search platform is concerned, and we'll give you an update later tonight. Best of luck trading, guys, and we will see you tomorrow. Cheers.